And good morning. Happy Friday. All right. The last Friday, Friday the 13th. It's Friday the 13th. Be careful. Black cats. Don't walk under ladders. Oh, Deb, come on. They don't go up forever. There's nothing that establishes this market as a new bull market. There's going to be red bars. So you got one red bar ignored. That was supposed to happen. You remember our conversation? I don't know if you were in the room at the time, but one of the things that I pointed out on this red day that rattled a few was, we had an igniting bar and it happened on decent volume and good AD numbers and such. And so while there's a topping tail, remember we were expecting a 1-2-3 pattern, which would have been a cleaner move up because it would have been an inside bar, give or take, at the top of the range. And this thing went too far, too fast, became a topping tail bar. And what I said in the room at the time, I said, just envision this if this was a line chart, close on line. What would you see? It went sideways. It did nothing. So there was no damage done to the effect of this bar, and it had a void to move into. And our bias was, right, it should go up to 4,000 on the S&P 500, SPX, which it either hit that yesterday or was within striking distance. So it hit our target area. There is room for it to go up. The question is, does today, which you can see prices are down, gapping down to the bottom of this slowing momentum bar. You could look at this as a bottoming tail bar. I look at it as a slowing momentum bar after a move up toward a target because the candle body is small, right? Small distance between the open and close. So it's not a bottoming tail bar like would be down here near support. There's demand. This told us that there was demand as prices dipped down. It was in the morning. Things were wild, right? They were whipping around. It was wild on the numbers. And then it came back up again. And then we just had this, coma-like trading, just nothing happening all day yesterday, back and forth, back and forth, back and forth, which could have led to a move above the high. And so as we look at different messages from different time frames and how they move, the structure intraday, did it move in the morning? Did it move at the end of the day? Was it an end of day base? Does it reach its target? We look at other markets and, okay, is there still a void and so on? So you got this slowing momentum candle, which was a base. Things went sideways in this erratic price action. And now they're opening down here, right? Down near yesterday's low, sitting in that 390 near yesterday's low. Correct. 393 right there. That's where it's sitting. So it's going to open up on some support. All right, so we're creating our bias here. This is still in its upward move. It's opening on support, and it's gapping down. It's a significant gap down, which is going to leave a big chunk of overhead supply above here. But our expectation is that on the gap down, buyers should be willing to step up here and defend this level. Now we're going to see how aggressive they are. Can they turn this back into a green bar and rally it back up by morning or end of day? Or does it hang here? Yesterday, we had a conversation about prices related to interest rates, if you recall, and about prices coming down to an area of support and the reaction to that, and could they possibly go down? And I discussed the kind of price action that we would be looking for. So And that was, hey, if it comes down here and it say it goes sideways until 10:30 or whatever, and we see an attempt to go up and it comes right back down again, that tells us that this supply down here is thinking, I better get out of this thing because it ain't coming up here. That's their belief. And so as we look at the evidence bar by bar, that would open up the door to moving down to the next level, which would be down here. There is this unfilled gap down here. So just keep that in mind. But then, the move would be down here, and then we'll just have to see. I don't know that it'll go down there today, but we'll just have to see how this plays out into next week, because next week is options expiration. There'll be more earnings reports coming out and so on. All right. What's going on here with my monitor? There's things here. Now I can't see the quotes for SPX. Anyway, let's continue here. All right. No futures. You can see the reversal down, and it's continuing to move down. There's our pivot low. So we've got a short-term bearish pattern here. Now, if this was to turn into a bottoming tail bar, that would be a bit more encouraging, that maybe moving up into this area where the actual resistance is. Yesterday, day before that, we talked about this 4,000 level having a very large open interest in call options. The put options, a lot of them were closed, I guess, on the way up, but there's a big open interest expiring next week at this level, and that's going to act as resistance. As you can see, it did. This is pushing it back down near yesterday's low, which would suggest lower. So they say, looking at the Qs weekly 20, 200, and NMA are at the same point. Any indication? Well, I don't know. Well, I don't look at those moving averages on my weekly chart. I've just got a 20, but you're telling me the 200 is there. I can turn this to a weekly and see what that looks like to me. I don't use an 8MA. All right, so you're saying the 8MA is here and there's a cluster of moving averages there. So I get it, Jose. This is something that you have to realize. Moving averages are subjective. We use moving averages, and I don't use a 200 on a weekly chart. I don't put the 50 on a weekly chart. I don't use an 8MA on a daily chart. So a confluence of moving averages, all it's telling you is that, there has been some type of a consolidation where, from a longer term point of view, right, where things were whippy, right, 200 MA was above the 200 MA there, and it came all the way down, of course. And that the 8 has to be there because it's close to current prices. And now you've got the 20 there. But does a confluence of moving averages make a stronger area of resistance? You could be led to believe that, as many of us are at the beginning, but then eventually you come across a place like Master Trader, and they tell you moving averages are subjective. And even we recognize that as being, hey, volatility has contracted over a period of time, but are those moving averages, those squiggly lines that we put on charts, actually resistance? No, they're not. You have to look to the left for actual resistance. And so as we go that and we look at this hourly chart, and we see there's nothing there. And there's very little here either. And we have a concept of neutralizing what's to the left. So price is traded above and below this area. So, well, this may be a focal point, right? a gap, these moving 200 MA, for who's watching, a self-fulfilling prophecy. In any event, it's coming up to resistance. And one of the reasons we look at other markets and other pieces of information is because sometimes options activity is going to have an effect on price action. So that 4,000 is a big level. Is this going to be able to continue to move up? You could look at XLK, and if you look at SMH, so these are some of the things that I'm sure I'll be reporting on over the weekend letter. The strength in SMH, and that's encouraging, and the fact that interest rates have come down, but they're on support. Yesterday, I spoke about the potential for this to become a W bottom. You see it's holding this area. We'll see where it ends the day. We talked about the dollar coming down to this major support point. And I don't know, whatever moving averages might be there. I'm looking to the left. This suggests to me that the dollar is going to begin to take hold here. So if interest rates are going to begin to take hold and the dollar begins to take hold and they start to move in a direction that the markets don't like, and SPX is up at 4,000 with that big open interest for next week, it's going to have a hard time here. We see the markets are down. Sentiment is almost into these bands. Breadth is at 305, which I like that. I like it because it showed some decent strength during this rally. So part of our discussion yesterday was like, depending how far this rally gets, we might be headed for a trading range for a little while, which could result in a market moving higher. So we need more information to come to that bias, which I think will play out as these earnings come out. And the options expiration for next week, we'll get a better insight into that and how, what happens here with the dollar. Buyers are going to show up. So when that happens and the dollar reverses, which it's, coming up here a little bit, and if this turns out to be a breakdown failure, right, then you're going to see gold, which has had a very nice move, taking out this pivot. Gold is going to start coming down. So if you're holding gold and this dollar starts moving up, you're probably going to want to start trailing prior bars lows or to selling half. And then, right, gold is at resistance. It's at this pivot here. It's actually a greater than 100% retracement. And in addition, Bitcoin has had a very nice move. And I think those that have had a reprieve with this disgusting chart, moving down, coming up toward 20,000. If I was them, I know they think this thing's going to go up forever, even though it might go down 80% at one time. I'd be encouraging them to take some off the table if they bought down here, especially after that wide range bar. But I think the markets are going to be in for a little bit of corrective price action. We'll see how corrective that turns out to be. This led the way up. There's sellers here. Look to the left, man. This isn't rocket science. You just got to simplify things by taking the indicators off. Right? S&P is turning down at the 200, the 4,000. Qs are rolling over. SMH is near resistance. XLK, where's XLK? Underperformed, minor resistance, and even the biggest piece of crap in the S&P ETFs reached a major resistance area. So a lot of good things happened, and now it's a time to be a bit cautious. Right? SPX levels. Let me see if they zeroed my quotes out, because that monitor, Zoom does this to this monitor. I don't know why, every once in a while. But things are down. I can just eyeball it. Things are down here. If you can get premium down to 3,900 or below, that should be good. Anything, let's just say above 40.20, they zeroed out all the quotes, I think, here. Yeah, they zeroed out. Something above 40.20 should be fine. you're down here above 4,000 and above 3,900. Right. All yours, Dan.
All right, good morning. Have my new mic set up on the other computer. Yeah, so I had a bias day trade long if we happen to take out yesterday's high, day trade only, and then 30-minute low for call spreads. We were very aggressive on this turn down here, and then we've been selling things into strength. We were very cautious on new swings. We did give 2 double bottoms yesterday. MJ, the marijuana, and Sierra Golf, double bottom. Those are the only 2 new trades we gave. That's it. Otherwise, we're just been managing opens, and we're only down to 1 open in the weekly options traders, the put spread on LOW that expires today, the 200s. And, we traded this week. Excellent. Let's see, Goldman is one that yeah, CGC. Yeah, I did that myself, Neil. I sold 2.5 puts. But yeah, let's keep an eye on the marijuana patch. CGC, I sold 250 puts, stop under yesterday's low. Tilray, Greg had on his screen, and that's what got my interest in it. There's another beautiful double bottom. That's a textbook W bottom. They're so easy to see. And actually, we're still in Charlie Mike. There's a little bit more complex one, but it's also a double bottom with this 180 reversal being the new low plus reversal. And so we bought that 1, 2, 3. We're just in trail mode on this. That's an open position. Another, well, this isn't marijuana. This is the mining, but these Bitcoin equity stocks have had a good run, as well as leisure. Look at Jets. Wow. That surely looks like a wide range ending bar. So that, if there's any juice, it looks like a day trade short, 30-minute low, plus a no-brainer call spread if there's any juice up here for next week. Cruise ships, hotels, SeaWorld, all those things were ripped last week. All right, back to Goldman with these bank earnings. We're out of half of this. This is in last weekend's letter, so we have a beautiful open gain. So even with the gap down, we're just limiting our gain, but we just made the calculated decision based on the very, very bullish close on the daily and 15-minute chart. We said, let's see if we can get a couple dollar gap up and sell into on earnings. And so that's going to go against us, but it's fine. Let's look at these gap earnings stocks. UNH, I was tempted to sell the 470s yesterday. But that's a put spread over yesterday's high. I actually only did 1 earnings trade myself. I see it gapping down here to 1.25. I sold the 115s. WIT, no pattern. Bank of New York, slopping around all over the place. Citigroup was worse. Now it's relatively flat, but extended. BlackRock, same. Wells Fargo is the bad bank of the big banks. They got all kinds of regulatory problems for years, rightfully so. Gapping under here, that'd be a no-brainer call spread for next week. BAC, same. JP Morgan, same. Call spreads for next week, if there's any juice. Delta Airlines. Now, this one I was considering selling a call spread. When you get something that runs crazy like this into earnings, I don't care if you open up, down, or sideways. My bias is 30-minute low, sell a credit spread. And now that's an ugly gap down. Wow, that's a big gap. Look at that. That is a nasty shock pattern to the bulls. It just makes absolute 0 sense to me. If you bought this and it rallied from 33 to 39, you got rocks in your head to want to hold that into earnings. At a bare minimum, you should be selling at the money calls to reduce the cost basis. HBI, I don't know what's going on with this, but this has been on fire. That's going to be a top here soon. I'll get on, volume. Tesla lowering margins again. I was watching this as a potential bottoming pattern over yesterday's high, and now the gap down's messing it up. So we're back into a range bound. So I'll actually keep an eye on a possible condor. Purple. This is not what we call a bottoming pattern, like we talked about in MT Live. Bottoming patterns are after many months of just getting crushed. This instead is bullish consolidation in a trading range above the 50. But I love this gap reversal, closing breakout, then a 1, 2, 3. That would have been a no-brainer 1, 2, 3 4 days ago on Monday. Beautiful entry right there. But now, it's a buy on. Actually, that's a buy on a pullback. Look at the daily. I'm sorry, weekly. I'm adding purple to my core long list. Hey, somebody remind me. Let's review my core list later. Look, I haven't looked at this in a month. So here, let's see. At around 10:30, let's come back to this, and for a good reason. One is, let's see how those stocks did a month later, and number two, clean up the list and set some new alarms. DMC, I don't see any prints, but over yesterday's high, looks fantastic. Another one of those consolidation type things at the 50. I like it a lot. All right. Greg asking me here on YouTube, people, on Delta 5-minute low short. The problem is on Delta 5-minute low is it fell too much already. If it gaps somewhere, 38, 50, 60, whatever, where it's just deep into yesterday's bar, then 5-minute low would have been better for me. It's just down too much. So someone saying CAT got upgraded. Yeah, we've been trading that directionally and also put spreads lately. I'll put it back on the list. Fernando, what do you? Okay, yeah, Fernando was asking about Delta. All right, where was I here? Space. Space has been on fire. Now it's gapping up, so that's actually a call spread. 30-minute low. This could be a gap and crap. Selling out of the money $6 call spread for next week if there's juice. They want to. Branson wants to send people to space, I guess. I just read this ELWS is a new Japanese mining Bitcoin mining company. So we'll keep an eye on that. I like IPOs. GRFS. Why am I looking at you? I guess just because you're strong is all. We also we said yesterday, even if you see bullish patterns, I was reluctant to get into them. Because if the tide's going to go out, then even bullish patterns are not going to act as well as you think. Hexo, it's another beautiful bottoming pattern. That's a big gap though. This is another one of those marijuana stocks, I think. But go watch last Wednesday's MT Live. We had a great session on bottoming patterns, and they come in all different flavors, but this is one. You got your something something bar yesterday with a price void. The problem is my target would have been $1.60 to $1.80, and it's gapping up there, so that's the problem. A Rambler, that was a beautiful bottoming pattern. Just beautiful. Went down, retest, up, pull back, closing breakout. It's just no brainer. You know, I can only watch so much. Hey, Alex, cop alarm we talked about over yesterday's high. Start off with a day trade. Doesn't have a big enough void for me to want to hold it as a swing, but you know, let's watch that 30-minute high. This GNS, another bottoming pattern, multi-month bottoming pattern. Now it's a gap up. Let's see if it can hold. I actually, on this little pullback pre-market, I was bidding 48 cents right there on the bid, and I did not get filled. My order is still there though. Just, you know, like the 1/5 lot. Yeah, that's yesterday's low, sure. Yeah, that's what Greg was saying. All right, this Frick, that's the one I sold puts on myself. Let's see what I'm saying. So I was bidding 5 cents to get out. Not filled, but it's probably because the spreads are asinine. Yeah, 10 by 75. Yeah, so I just gotta sit with that for a few minutes.
Was a beautiful little buy setup. Again, he was talking on the Q and Qs. I just sold them. Beautiful little bottoming pattern there on the 1 and 2 minute.
Wow, that's Mannix. That's a monster gap. Cat. Yeah, nothing to do with cat now though. BMC, I'm gonna set an alarm at 182.50.